The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the March 23rd magnificent Monday edition of today's opening bell on the Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there had a fantastic weekend. Let's make sure that you and I, that we do everything we can to have a marvelous Monday. Of course, the easiest way to do that is to always remember that life happens for us, not to us. You see, when you and I, we make that one little shift, that one little 2x4 shift out there, it means that you and I can find the gift in every set of circumstances that life is going to go ahead and throw at us. And that's the role of the universe out there. I'm absolutely grateful for your presence here today. Glad to be back with you. I'm certainly here to serve you, so feel free to dial on in at 877-927-6648. Of course, internationally, just dial the number 727-445-1044. It is Magical Monday. Of course, this is Tiger Financials Network. I'm Steve Rhodes. Welcome to the show. Right now, we've got the futures are flat out there. Dow futures up 3 points. They're trading at 18,036. S&P is flat, trading at 2,099. NASDAQ is flat, trading at 44.47. Russell 2000 basically flat. The king of dollars out there, back 586 ticks, trading out at 97.58. Gold is down $2. Silver's off 3 pennies. Light sweet crude down 36 cents out there. Okay, so we got a flat market. So where should we begin? Well, let's actually take a quick peek across the globe out there. You know, we like to look for some clues out here. Let's see what's going on in the DAX and the FTSE. The DAX is up 140 points. The FTSE is up 97 cents. We got a flat FTSE. Let's take a look at this chart out here. What do we know about the FTSE? Number one, we know about the FTSE is she has broken above a long-term consolidation. 800-point consolidation, 789 if we want to be exact about it. That says that the FTSE is on its way up over the long haul to 76.64. That's its projected price move. That's that 789-point consolidation price move. So long as the FTSE stays above the price level of 6875.62, that's what we should expect. That's what I expect that we will see going on into the summer months out here, into the May. We see a bit of a pullback, and then we see the markets motor on through the July timeframe out there. And that is the message of the FTSE. If we go take a look at what's going on inside of the DAX out here, trading out at 11,897. We know the DAX had a target here of 11,708. That was its projected move. This is a daily chart. That was the consolidation that it was in. Of course, it's trading at 11,796 right now. Remember, when you break a consolidation out here, consolidation pattern, your projected price move is equal to or greater than the consolidation level. We take a look at the A to B equals CD patterns here inside of the DAX. Your A points all the way down here at the bottom of the consolidation. October 16, 2014. Your B point is up here on December the 5th. Your C point of retracement down into December 16th. We can also see a 1 to 1.618 A to B equals CD that it has completed out here. Unless the DAX breaks down, your next price target out here would be the 1 to 2 A to B equals CD pattern. That's 12,695. I expect that's what we'll see maybe after about a 5, 6, 7 trading sessions of maybe some sideways choppy action out there in the market's waters. Now let's go take a look at, since I haven't been with you for about 5, 6, 7, 8 trading sessions or so, and the markets are flat. Maybe it's best just to kind of get a feel for, well, what's transpired since we last were with each other. And the easiest way is probably to go take a look at some longer-term charts out here. So let's go do that. Let's take a look at the weekly chart, and let's take a look at the Dow. The Dow's been the weak link out here in the markets. And if we take a look at the Dow, if you're watching us on TigerTV, I hope that you are. If you're listening on your radio, your mobile device at tfnn.mobi, thanks so much much for doing that. Remember, you can always catch the archive of this show on Channel 9. And what you would be looking at is the Dow's weekly chart. Now, you're going to see mostly horizontal lines going across my screen. You're mostly going to see lime green horizontal bars. These are the horizontal trading range boundary lines out here. A little bit different than Bud Rolf's work with the primary trading ranges. This because I've got this automated. This is automated, so we're just taking a look at the bodies of the candles, either the close or the open. The system automatically identifies where the largest number of points of contact takes place, and then the second level and the third level. And once we have that equidistant price range out there, price tends to move with inside those ranges. It's different on a weekly chart because your candle close on a weekly is going to be different than a daily, different than a monthly out here. What we know about the weekly chart is the solid green lines. Those are your real significant levels of support and or resistance. This is a weekly chart. So when we last were with each other, basically, we saw price running right into resistance at the price point of 18,291. The actual price high during the week that began March 2nd out there was 18,288. Close enough. We don't use these as exact. We use these as more like Jack Sparrow, as guidelines out here. Then what did we see take place? Well, the week before last, we saw price move down into the midpoint. That's the dotted line going across my screen. Oftentimes, those act as areas of support and or resistance. In this case here, it became a support level, and that's where we saw closing price at 17,749. Now, 18,000 to 290 area becomes a significant level of resistance. If we see the Dow close above this on a weekly basis, that then says that the Dow ought to head up to the 18,850 and or 19,410, where it runs into its next level of significant resistance. If we go ahead, let me actually do this just to clean up the chart just a bit. So the Dow is the weak link out here. Let's take a look at this. I'm going to go ahead and turn off the primary trading ranges here real quick. And I pull this back because now we're just going to take a look at trends out here. And if we take a look at the trend is your friend inside of the Dow. If we take a look at it, you're going to see two trend lines. You're going to see what I consider to be the two significant trend lines. One coming back to March of 2009. That's the blue diagonal line going across my screen. Its next touch point of any significance really was down here in October of 2011. Remember, the markets make lows in October. Do not forget that out there. Look for markets to be pulling. Wait for people to tell you about, hey, it's September, it's weak, and we're coming into that scary time, when the markets could potentially crash out there. I say get out of the way of that in your mind and know that the markets are going to be making a low out here. It did last October. It did back in 2011. No reason to not believe that it's going to in 2015 as well. We'll get, when we get there, we'll take a look at it. But right now, that blue trend line, we're way away from that blue trend line. We can also take a look at the white trend line coming off of that 2011 area. And we can see that anytime that price has pulled back, such as this past October, that is where the market found support. So what do we know? We know that the trend is still in the up spot. What the heck am I talking about here? We also know that we've got some horizontal levels of resistance. And inside the Dow, what you want to be watching is that 18,290 area. If we do see a close above that this week, that gives the promise of 18,850. Now, that's what's going on inside the Dow. Let's go take a look at the S&P 500 out here. Let's do this for each of them. That way, it gives us a fairly decent view as to where we're at in the markets. Now, if I turn that off again, just take a look at the trend lines inside the Dow, inside the S&P. You'll see that blue line. That's the one that takes us back into the 2009 timeframe, well above that. And if we come to that touch point and we use that October 2011 area, we can see that that trend has not been broken. It has never been broken out here. In fact, price just simply pulled back into it like a thing of beauty back in October of 2014. Now let's take a look at the horizontal levels of resistance. Well, inside of the S&P 500, let's go ahead and expand this up. What we saw take place 2 weeks ago was price pulling back, just like in the Dow, pulling right back into a level of support, the weekly support of 2,042 and or so. We saw price get down to 2,039, close back above it. Inside of the S&P, the levels to be watching, the level to be watching is 2120. Any close above 2120, I'm not talking 2121, I'm saying any close above 2120, that then gives us our next top price target out here of 2198. Remember, the S&P 500 wants to run to a minimum of 2350. That's its sideways consolidation. Remember, we looked at the DAX a little bit earlier. We're taking a look at that sideways consolidation. It fulfilled that at least first objective out there. We took a look at the FTSE. She's broken through its consolidation patterns out there. It wants higher price. These markets, we can put up the charts here that show us the correlation between what goes on in, maybe I've got it set up for the composite, the FTSE, the DAX out there. They all basically work in harmony. That's why we look at these charts, because it's really, we're agnostic with regard to what is the symbol that we're looking at. Of course, we want to know the symbol in this case here so that we can put it all together and understand the correlation. So key level of resistance. I don't know if, in fact, the S&P is going to take this out. I know what it is that you and I need to be watching for, and that is a price move above 2120. Likewise, to the downside, if we were to see price somehow move downward and break below that 2042 level, we'll take that when that occurs. At this stage here, I believe that the market, just as I have been explaining really since January, that the market was going to make a significant low in January. It's done that. It's fulfilled that objective. The markets want to run higher. There is much more room to go, and inside the S&P 500, you're looking at that 2198 level. If we go take a look at the Russell 2000, let's do the same thing out here. If we take a look at the small caps are very much like the FTSE. The small caps have broken through their long-term consolidation pattern, and that has a price target of 1350, where right now we closed out the week at 1266. What else took place last week that is very important? Well, take a look at its horizontal resistance line. That's at the 1242 mark. Last week, we saw price blow right through that. That says the Russell wants to go ahead and move up to the 1284, 1285-ish range. That's its midpoint of its next move. This does not have to act as resistance. However, the key level to be watching now, in my opinion, inside of the Russell 2000 is going to be that 1242 mark. If price comes back, tests it, rejects it by staying above that, that says that what price wants to eventually do is get up to 1327. 1327 is that next horizontal trading range resistance level. Of course, 1350 is really the mark as far as where the Russell 2000 wants to head to. That's going on there. Let's take a look and see what's next up here. Let's go take a look at the NDX 100. You're going to see similar messages out here. If we take a look at the NDX, if we take a look at its trend lines as an example, what's interesting about the trend line inside the NDX is the trend line that began in March of 2009, which its next touch point is at 2011 low, significant low out here. What's interesting is that if we take a look at that trend line, the blue line going across my screen, as well as the trend line that began back in 2011, they're pretty much right on the same plane out here. So that is that's your really significant level of support right now. Major support out here. If we take a look at what's going on the weekly basis, last week, the week before, we can see that price came back and tested its horizontal level of support. Inside the NDX 100, that was 43.24. That's when my clients and I went long the NDX 100. That was after us being short. So we were short. Of course, while we were gone, we went ahead and changed that to a long position. Right now, the key level is 44.97. You get above that, and 46.71 is your number. This is Steve Rhodes with TFNN. We'll be right back, folks.
As this one-of-a-kind winter comes to a close and spring approaches, it only seems fitting that now is the perfect time for a spring Tiger Dollar sale. For this week only, we're doubling the bonus that we give when you purchase any amount of Tiger Dollars. Normally, we offer a 10, 15, or 20% bonus when you purchase Tiger Dollars, but for this week only, we're doubling our special offers, and you can now get up to a 20, 30, or even up to a 40% bonus on your Tiger Dollar purchase. This is one of our best Tiger Dollar sales of the year and won't be around for long. Tiger Dollars can be used for any TFNN product or service and provide a great way to lock in added value on your subscriptions. Tiger Dollars never expire, so whether you're a current subscriber or plan on subscribing at one point in the future, take advantage of this spring Tiger Dollar sale this week only and get up to a 40% bonus on your Tiger Dollar purchase. This sale ends Sunday night, so don't miss out. All the details are on the front page of TFNN.com. Get your Tiger Dollars today and lock in your bonus before this sale passes you by.
trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We were taking a look at the longer-term charts. We looked at the S&P, the Dow, the Russell, the NDX 100. Let's go ahead and cap this off and take a look at the NASDAQ composite. And what we're identifying here, we're certainly the trend that's in place is still an uptrend that is in place out here. Now we're just taking a look at these horizontal levels of support and or resistance. Now, inside the composite probably gives us a pretty decent message, whether it's this week or next week. It's next level. So it ran into some resistance here last week. And it ran into resistance as it got up to the 5,055 level. The actual high last week was 5,042. So it's right in that range. Any close above 5,055, that'll bode very well for the markets out here, because the NASDAQ will go ahead and drive the markets higher. We'll go ahead and lift the boats. And if we can see it close above 5,055, its next level, its next miniature hurdle is 5230. Where it really wants to go, and any close above 5,055 is the 5405 level out here. In fact, you know what I ought to do is I didn't do this for the NYSE. Let me just put this out here, NYA. Let's go ahead and see what levels it gets posted in here. Now, inside the New York Stock Exchange, very much like the FTSE out here. It's longer-term consolidation, like a 6,000-point consolidation, is at that 10,387 mark out here. It looks like I need to add just maybe a couple of, maybe not. If we take a look at the NASDAQ Composite, back here in October of 2014, when price was pulling back, interestingly enough, was pulling right back into that support of its horizontal trading range boundary line at 99.77 mark. What took place last week is the New York Stock Exchange got back above that midpoint level, and so you'd have to say that any close above the actual high out here, which is from the week that began February 23rd, that high is at 11,142.56. Any close above that says 11,578 becomes its next run out there. So that gives us a pretty decent feel, very good feel, as to what is going on inside of the markets. Now, interestingly enough out here, I took a look at this just before I came on the air. Now, this chart here, we'll take a look at correlations. I mentioned correlations between the FTSE, the DAX, and probably was the composite. I can try to find that screen out here. But this is a chart here. Take a look at the Q series out here. Now, the top portion of my screen is the QQEW. That is the First Trust NASDAQ 100% equal weighted ETF. You know, the talk of the town. Now, I don't know talk of the town because I totally, shut things down. But the talk of the town out here has been that, it's all about Apple and Apple driving the Qs out here. Well, the reality is that's nothing more than BS before Steve. Right, it's all BS because when we take a look at the equal weighted ETF, that says that Apple has an equal weighting to every other 99 other equities within inside that index. And what we can see on the top line here is the equal weighted ETF actually got above its highs, closed above its high from back on March the 2nd. The actual weighted portion of the Q series has not made it above that high. Is that a problem? No, usually it's the equal weighted ETF that points the way. It helps us to identify when divergences take place. It is when the QQEW, for example, is moving lower and the QQQ series is moving higher. That's a divergence to pay attention to. But when you've got the equal weighted ETF that is moving higher, that tells us that it doesn't matter what the weighting is inside of Apple out here, inside of the Qs, that really all the king's horses and all the king's men have more than put Humpty Dumpty back together again. And this bodes well for higher prices going into the summertime out here inside of the QQQ series. That does not mean that we don't see about 5, 6, 7 trading sessions of choppiness out there. That doesn't change my perspective. This is not just simply a one-way up elevator out here or escalator, although it's been a pretty decent one-way ride to the upside. But the QQ, and when we take a look at the equal weighting inside of the S&P 500, we don't have that same message. We don't really have any message out here in its case. And here's an example where if we take a look at the correlation, if you look at the most recent high back in the March timeframe out here, we saw that the RSP, that's the equal weighted for the S&P, that's the Guggenheim S&P 500 out there, that was making lower highs while the S&P, the weighted ETF, was making higher highs. We really don't have that as an issue. There's no signals out here between the equal weighted inside the S&P 500 to suggest to us that any kind of significant top has been put in place out here. So the original outlook that we gave you back in January, still in place as we speak today on March 23rd. We get back from this break, we'll go see how this market is going to pop and drop during the first half hour. But what you and I know is the longer term outlook. And in essence, that's really what's most important. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar is ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 25 points, trading on 18,152. S&P up a point at 2109. Composite off 6 points at 5020. Russell 2000 down 2 points at 1264. The DAX off 148. FTSE is flat. You've got gold is flat out here, trading out at 1184. Silver off a nickel, no big deal, trading at 1682. Platinum's up, looks like $21 out here. Now maybe I've got the wrong contract out here. You've got light sweet crude up $1.76. Looks like as we speak, trading out at 45.72. Of course, I've been away for a week and some futures contracts rolled here. Hey, we've got the euro. Let's go take a look at the euro out here. I caught the end of John's show and heard Tom And John, speaking about the euro. Now, if we take a look at the weekly chart out here, that's what I've got up on my screen. Let me do this. Let me turn a couple things off. That way, it becomes a little bit easier for you to look at what I'm going to show you. So let's turn off the boxes. Let's turn off the retracements out here. Let's turn off the moving averages. There we go. I thought I got that. There we go. Okay, so now we're looking at a relatively clean chart out here. What I want you to notice, this is kind of interesting. I didn't study this totally thoroughly. I don't even know. That's pretty poor grammar out here. But a quick study, if I take a look at the top that was formed out here on a weekly chart inside of the euro, that takes us back to this candle right here, May 5th, the week that began May 5th, 2014. So on May 9th would have been the session end out here. What's interesting is that is a key reversal session out here. What does that mean? That means that the prior bars, high and low, was exceeded during the trading session. It's a weekly chart. And we saw a lower close out there. It's also a bearish reversal signal, but I'm just looking at, there was a bearish engulfing candle, but I'm really just looking at the key reversal week that was out there, and that's up at the highs. Now, on the way down out here, we have not seen any other key reversal sessions until last week. I believe last week, as my eyes take a look at it. So last week at the low out here, we saw a key reversal week. That means that the week that began March 9th, which the low there was 1.04625, last week's low was 1.0459. So it exceeded that low. We certainly exceeded the high out there. Maybe this is a change in trend inside of the marketplace. If we take a look at the retracement out here from that high, that key reversal session, down to last week's low out here. It says that at minimum, you ought to see the euro bounce to about the $1.18 level. That's your dead cat bounce, your 0.382 retracement from that key reversal high to the key reversal low on a weekly basis. If we had just simply taken like a daily charts, we would not have been able to have seen that same move out here. In fact, you really wouldn't be seeing any kind of real significant reversal candles out there. That's why it's always good, whatever it is that you're looking at trading, make sure you look one level up and one level below from a time frame standpoint in order to get a feel as to what's going on. It's why we started the day by taking a look at, hey, what's just simply going on inside of the markets on the weekly time frames out there. Now, if we go take a look at, so that's what's going on inside of the euro. And you've got the, U.S. dollar index pulling back. So if the euro is going to move higher because of its weighting inside there, that ought to put some pressure on the U.S. dollar index. What does that mean? Well, its correlation works more towards the commodities complex than it does with regard to the actual market. The currency pair, as you know, that works towards the market is really the euro-Japanese yen. If we take a look at the euro-Japanese yen, this is a daily chart out here. We've seen this come off of the bottom out here. There hasn't been any real significant moves of any substantialness. Not that that is a word out there, but of anything significant inside the Euro-Japanese yen. It is trading higher today. As long as this currency pair continues to trade higher, that bodes well longer term for the markets out here. If that currency pair begins to fail, then you've got problems in River City. But as we speak right now, there are no problems in River City. If we go take a look at, this is interesting here, the summation index. I would have to say that the Dow is probably the key one to be looking at. If we take a look at the summation index, we've had changes across the board into the bullish mode out here. By bullish mode, you've got your price oscillators getting above the zero line. If we take a look at the composite, just as an example, we just simply start out here. The composite went ahead and reared its head above that level. This was on the trading session of March the 18th out here. So March the 18th, they cleared that hurdle. So long as it stays above that zero line out here, it tells you that the buyers are the ones in control of the market. We know that inside the composite, we looked at what? There was like that 51.15 level, something right around there, 5,050. Maybe it was 5,055, I think, was the level out there of resistance. So that's going to be a key area for price to get above. Right now, you're in full-out bullish formation. If we take a look at the summation index, take a look at the price oscillator, it was, as I've mentioned, the Dow that has been the one that is struggling, the index that has been struggling out here. But on Friday, it managed to get above It's zero line in the price house. So we saw just a brief attempt to get above that back on the trading session of March 18th. Then it pulled back for a day, got just back below that level. Then on Friday, moved above. So we'll see. And as any continued move higher inside of the Dow today says it's now joined its brethren, the composite and the S&P. I'm sorry, and the New York Stock Exchange with regard to signals that the change in trend is also in place here. Now, these are great tools to help us understand what's going on with regard to a trend. Not a great tool to be able to pick the bottom and or pick the top. Sometimes within a day of the bottom or top, you'll see a change in that oscillator reading inside the summation index, but usually it takes a few days out there. Nonetheless, it is an important tool for us to be paying attention to and focused on. If we take a look at the New York Stock Exchange as well, this is in full-out bullish formation out here. And so the New York Stock Exchange just right now trying to take out its highs out here from back on what looks like February 25th out at that 11,142 mark. So everything in bullish formation here as we take a look at these three indices using their summation index. If we go back and take a look at what's moving in the marketplace out here, you've got CyberArk software that's moving to the upside, up $3. That's up 6.5%. Avago Technologies up about 1 7/10%, $2 and change. Herbalife up $2. Amazon up 2. General Dynamics up $1.50. IBM. We'll take a look at IBM. That's up $1.60 out here to the downside. Vertex Pharmaceutical down 6% off $8. Biogen, BIIB off $6, 1 2/10%. Kansas City Southern off about 6%. You've got Perrigo Company, that's off 3.5%. Isis Pharmaceuticals down 4. Celgene off $3. So it looks like that IBB probably struggling just a bit. That IBB really took off to the moon, did it not? Last week out here. Let me just put that up on our screen. Let's go see what that is doing. I've got the IBB, the biotech sector. This is a daily chart that we're looking at out here. Pretty tough to figure out where this thing may be headed to. Let me pull this back. Let's actually put this on a longer-term chart out here. Let's put this on the monthly chart. Let's see if there's any real A to B equals CD patterns out here. If there is, it's a doozy, that's for sure. Doozies, that's a real technical term out here that says your A point is down at August 1st. Back in 2011, your B point out here on February 1st, the week, this is a monthly chart, the month of February in 2014, shallow pullback into April 2014. It says that the IBB on a monthly basis wants to get up into the 398 level. You're at 359 as we speak right now. Quite frankly, the way I would take a look at this A to B equals CD pattern, it would not surprise me to see 451 as an eventual mark. Again, it will not move up there in any kind of straight line formation. Now, the B point on this had 27 million shares, and it was crossed with 42 million shares. That was the month of October 2014 out here. The B point being February 2014. So you have it confirmed. A to B equals CD to the upside inside of the IBB on its monthly chart out there. Again, daily chart doing something different out here. But again, you got to take a look at different time frames in the market. Question being, was last week's candle some kind of bearish reversal signal? And the answer there was no, it was not. Just simply a sold off during the week after making a higher high out there. That's your IBB. Let's go take a look at some of these other equities that are moving in the marketplace. Let's take a look at moving to the upside. CyberArk Software, CYBR is the ticker symbol. I do not see any kind of news behind it. Let's take this. This is a daily chart out here. Now, CyberArk, CYBR. This thing had a nice little breakout session that took place on February 13th. And that was with wide price spread, accelerated volume, 7.2 million shares, the top of which the break was the high from February 12th. And that high was at 45.99, not 45.69, like it says on my chart out there, 45.99. Price pulled back into there and never came back and tested that level of support. Came back with about 2.8 million shares. March the 16th, came back with 1.4 million shares on March the 20th. It has basically, this is interesting because it made the high with 6 million shares and then pulled off that high with about 11 million shares on February 23rd. most likely, CyberArk is setting up some type of consolidation pattern out here. That consolidation pattern says it's going to run into resistance up to those highs at the $70.48. Its next move most likely into the 58.29 level out here. That's CYBR. Let's take a look at Avgo Technologies. AVGO is the ticker symbol, up about $3 as we speak right now, up 2%. If we take a look at this looks like it's at all-time highs out here. This had nice wide price spread, accelerated volume, and that was back on the trading session of February 26th. That level. Now, gaps are your friends out here. Do not be too focused on the mere fact that gaps have to be filled out here. What you like to do, gaps give you two potential opportunities to get into a trade, or to at least be able to have information released to both you and I. The top of the gap in here, that's going to be the bottom of the February 26th candle. That low, 123.05, 8.9 million shares. Now, price pulled back into that level with only 2 million shares on March the 12th out here. Also formed a little bit of a bullish engulfing candle out here that held as support. If we pull this back a little bit further, let's try to figure out where this thing is headed to. Looks like some large A to B equals CD up patterns. Let's put this on a monthly basis, though. See what this is doing on the real longer-term chart out here. Well, that's just nothing but a skyrocket out here. But when you like to be a holder of this equity, taking you back into 2009 at the $14 level, it's at 135. So nice 10 banger out here. We're not going to be able to get any kind of A to B equals CD pattern as we take a look at the monthly chart on this equity, Avgo. It'd probably more look at... what would you look at out here for an A to B equals CD pattern? It'd be pretty tough. You don't like to force it. I'd have to say I'd go with this one here, with the lows back down here in October 2014. Your B point being up here right around December 2014. Your retracement down into January. So the 1-to-1 is what it's already tackled and done. You'd have to say this equity is headed to the 141-ish area. It's 1 to 1.272. A to B equals CD to the upside. That is Avgo Technologies out here. Moving to the downside out here, you got Regenerate Pharmaceuticals off $13. Let's go to Jerry in Nashua, New Hampshire. Jerry, thanks for calling. Thanks for holding. How you doing this morning?
Not too bad. Yourself?
Doing great. Thanks so much for asking. Great Panther Silver is the one that is the equity that you called about. Tell me what you're doing, how I can best help you.
Well, I was looking for, I guess, I've been looking at this stock for a while, and a little while ago it actually came down on some pretty big volume. And we had talked about it, and you said to kind of stay away from it for the time being, but it seems to have settled down, and it seems to have kind of tested the lows along with gold. And I guess I just wanted to get your feel of where GPL might be going in the short and long term, and is it going to track with gold, and also where you think gold is going.
Well, in the case of, so that's a number of questions. Let me try to answer them. In the case specifically with regard to Great Panther, how I would trade Great Panther is this. It's trading at 60 cents. If you're looking at this from the longer term standpoint, you mentioned both longer and shorter term, I would trade this as an unexpired option. I would go ahead and take 1% of my working capital. Let's just use $10,000 at this point. 1% would be $100. I would take that $100. I would divide it by wherever it is you're going to buy it, divided by 60 cents. That's how many shares I would go ahead and buy. Then I would just stick it in the drawer out there. That's how I would trade it from the longer term standpoint. And that way, you know, you're risking 1%. You've got an unexpired option type of a scenario out there. And that's how I would look at it from the longer term standpoint with regard to Great Panther. The reason why I throw that out there is just simply because eventually this equity ought to move back to its highs. Its highs because it has a high volume, untested high on a monthly basis that could take this equity into the 355 to 504 type range out there. And so that's how I would go ahead and trade this. On the shorter term standpoint with regard to a daily chart out here, yes, there was some significant volume that took place on December 19th. I don't know what that was specifically, if they were issuing some more stock. I don't know what took place on that trading session. From the short term, Right now, it's got significant resistance at 61 cents. So as silver was moving up last week, it ran into resistance of its TAS market profile high at 61 pennies. And it created a little shooting star candle out here. On the shorter term, if you're going to trade it, your buy is about 54 cents. And you've got to take a look at, 6-7 pennies up there at 61 cents, is your resistance area. You need to see this equity on the shorter term close above 61 pennies out there. Now, does that help answer your question with regard to GPL on the short term and the long term?
Yeah.
Okay. Now, when we get back from this break, if you want to stick with me, we'll go ahead. We'll take a look at gold, and I'll ask you again what your questions were there. So when we come back from this break. All right, Jerry?
Okay.
All right, we'll go back to Jerry in Nashua. We'll take a look at Goldilocks. This is Steve Rhodes with TFNN. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. price. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's up 43, S&P is up 3, Composites up 10, Russell's down 2 points. We're going back out to Nashua, New Hampshire, to Jerry. Now, Jerry, your questions on gold were, how can I help you there?
Well, before the break, you said that, first of all, back to GPL, 61 cents is resistance.
61,
and so if we close
right.
above 61 cents, we are in good shape. Is that on a daily basis? Or
That's on the daily chart out there. That's correct.
Okay, and also maybe we should be looking more closely at silver, not gold, because this is a silver stock, right?
Absolutely correct.
You said last week that silver hit some resistance.
Silver, no, in the case of silver, no. Silver broke out on the daily chart. It actually broke out of any kind of resistance on March 19th when it got above its trend lines out. And let me go ahead and turn a couple things off if you're watching this on Tiger TV out here. What you can see is that silver, just like gold, has been in a decided descending trend channel out here. And on the date of March 19th, silver broke right above that level. And then you had some additional follow through on Friday out here. So in the case of silver, it's actually stronger than gold is. Now, Great Panther didn't exactly have a huge breakout. So I don't know if, Great Panther is struggling or what have you. Again, I think in the better trade in Great Panther is more of the longer term trade. More of that unexpired option type. I think there are better silver trades out here than the Great Panther as far as you being able to see some larger movement out here. But silver's broken out, and silver ought to make a run, its next run up to 17.27. I expect that we will see silver actually move back up to its highs in an $18.50 area out there. At least try to test that swing point high from January 26th out there.
Okay.
All right. Hey, thanks so much for calling, Jerry. Thanks so much for listening, folks. Stay tuned. I believe that Tom's going to do his 10 a.m. Market Minute. Great to be back with you. As always, stay tuned because the second hour of the Trader's Edge will be coming up in about 6-7 minutes after 10 a.m. out there. Have a great day if you're off to start your day, and I look forward to seeing you tomorrow. Take care, folks.